Hello there, so I'm still in Sark and I've just been swimming in the lovely sea there, as you can see, so I thought I'd do a video. By the way, this is a stunning place. It's the sea's about 20 degrees apparently today. Nice and warm, it's been warm all summer. And I'm training for this swimming competition thing in September, so I just had quite a long swim in there and it's very nice. Now, a lot of you said on the last video were commenting on the chemtrails. I didn't even know what a chemtrail was, so I had to look it up and I read the Wikipedia entry. And by the way, the Wikipedia entry on me is so factually inaccurate. There's so many mistakes in there. Like, I've got 4 kids, not 2 kids, and there's just loads of stuff that's just wrong. And I've emailed them and said, look, this is me, Dominic Frisby, I can tell you some of the stuff in the entry on me is wrong. And they emailed me back and refused to believe that I was me. And that I had a vested interest. And I was like, well, I'm just being honest, I'll just tell you. Anyway, but the Wikipedia entry on chemtrails says that chemtrails don't exist. But given how wrong the Wikipedia entry is about me, that probably proves that chemtrails actually do exist. Anyway, I had no idea what they are. But anyway, back to boring old financial stuff today. No chemtrails. I'll walk along this lovely beach here. And we're talking about the US dollar, which after a month or so of welcome respite has got much stronger, dangerous levels again. It feels weird being here and talking about the US dollar, but anyway, that's what this channel's all about. I should be talking about, you know, the fauna or something. Anyway, a strong US dollar really is the scourge of everything. Stock market's got walloped on Monday. The yen, the pound, the euro, they've all been walloped. Commodities to a certain extent. So I'm going to look at a couple of charts, and the US dollar index is the US dollar against the currencies of its major trading partners, the yen, the euro, the pound, and so on, Swedish krona, Canadian dollar. And so it's, because it's a basket, it's perhaps the most useful vehicle to study the dollar. And given how big foreign exchange markets are, you know, way bigger than stock markets, and the fact that the US dollar is the global reserve currency, I see that US dollar index as almost the most important price in the world. Right, so here is the US dollar index over the last 3 years. And you can see there's a textbook double bottom it made in 2021 in January and then in June. The pattern completed in June. And I was warning about it in Money Week. I can't remember if I did videos, but I didn't even know if I was doing the channel then. But in any case, I never seem to listen to my own advice anyway. But since that double bottom, all through the financial inflationary turmoil of the past year, it has marched inexorably higher, and now it's retesting its highs around 109. Now, it could be doing a double top here, but my stated fear for some time is that it goes to 120. Why do I say 120? And the reason is there's some history here. So let's look at another chart, which is the dollar since 1980. And you can see that 120 is the level it got to shortly after the turn of the century, and where it peaked around 2001, 2002. And then it went lower, and that helped usher in that epic bull market in commodities. Now, it actually got to 165 in 1985, and that was after Fed Chair Paul Volcker tightened a lot quicker and harder than anyone else, not unlike what's happening now. And the G5 nations, France, Germany, Japan, the UK, and the US, they all agreed to weaken it so as to reduce the mounting US trade deficit. And what followed were huge bull markets in both the Japanese yen and the German mark, the Deutsche Mark, and the stage was then set for Japan's lost decade. Now, this agreement was known as the Plaza Accord, and I don't think we are quite at the Plaza Accord levels of concern yet, by the way. But I mean, heaven knows what happens to the UK and Europe if the dollar goes to 165 again. But if it goes through 109, I would say 120 is back on the cards, possibly even this year, although more likely early next. The US dollar, by the way, the euro slid below parity with the dollar on Monday, and the last time that happened was around the turn of the century. It got to 82 cents back then. It's at 20-year lows, The pound is at 117. That's flash crash Theresa May Conservative Party conference depths of rubbish. And the reasons the US dollar are rising, well, capitalists panicking, and the dollar is the first place capital goes to in panic. It should be gold that capital flees to really, but it isn't. It's the dollar. It's the global reserve currency. Then there's the fact that the Federal Reserve Bank, America's central bank, is tightening faster and more aggressively than the Bank of Japan, the Bank of England, the European Central Bank, any of them. Meanwhile, Europe and the UK have got a plethora of gas and related problems looming, winter crisis that they could do without. You know, in 2020 we in the UK were paying the same price as America was for its natural gas. Now we're paying like 10 times more, and Europe's paying even more than we are. It's just so stupid. Anyway, forex wise, the US dollar is basically the best house in a bad neighbourhood. You could say the same about the American economy generally. Yesterday was a grim day, Monday was a grim day in the stock market, but there were some observations I was happy to make. Firstly, base metals, copper, zinc, tin, iron ore, so on, they all took a hell of a beating in June. They actually held up quite well, and that would suggest that they may already have made their lows. The action of precious metals, platinum and silver, especially over the past week, has been less encouraging. Gold's been okay, Bitcoin not good. Oil, meanwhile, looks like it's making an interim bottom and turning up. The last thing central planners want now is higher oil prices, but the market gods will care very little about that. It might be time to load up again on oil stocks if you are not already loaded. But more broadly speaking, these are risky markets, to put it mildly, so stay defensive, conserve capital, hunker down, and await more benevolent financial climates. That's about all I've got to say, really. Thank you very much for watching. Thank you for listening. Please subscribe to the channel. Please subscribe to my Substack. I'll put links in the column. If you want to get really defensive and buy loads of gold, I'll put a link to the Pure Gold Company, which is my preferred bullion dealer at the moment. And if you are in London towards the end of September, in or around London, I'm going to be doing my lecture, How Heavy, my lecture with funny bits, all about the history and weights and measures. I'm going to be doing that in the West End for 2 nights at the Museum of Comedy in London on September the 28th and the 29th. I'll put a link where you can buy tickets. Please come, it's a good show. Until then.